All right, so thanks for joining me in today's video. Today, what I want to do is give you kind of a quickie on an SPX trade and maybe trading the markets in this condition and this environment, maybe what I would do and kind of how I would approach it. So we'll do a little quick diagonal. If you are interested in working with me together, check out the Traders Fly website. There's a lot of coaching and also mentoring in there where I work with people, 3 to 6 months and more one-on-one and get in depth on their plan strategies and give you some more insight. All right, let's get started. We're going to go with SPX. I already have SPX loaded up. If we look at SPX and the chart, the market is pushing and moving higher. We had like a lot of gap downs here not too long ago, and now we're pushing higher into some higher prices. But I am a little concerned that, hey, what if this is just a little pop short term and then it just rolls over? So to approach this problem, what I would do is go in to about let's do about a 17-day or so, or 14-day. Let's try a 14-day first. And I'm going to go ahead and do a diagonal. I will do it on the put side, actually. So I'll right click buy and we'll do a diagonal. And then I'll go in and analyze this trade. I do have some other trades in here already if you were curious what those were. Here is some Iron Condor stuff that has some contracts on it. It was unbalanced for a bullish side, and this one's kind of coming in. It's near expiration, but it's kind of actually getting against me. So why don't we just close that out real quick while I'm here, because these are just some sample trades I sometimes do with my mentoring and coaching students. And then I have some more verticals over here that are also kind of already pushing into higher prices, pretty much, max profit in that end. So okay. So what we're going to do with our diagonal is we're going to go ahead and set this up like a very cautious or conservative diagonal, simply because, if the market pulls back, I am still concerned. Even though we're pressing a little bit higher, it does worry me a bit. So what I'm going to do is I'm going to do a few different diagonals. So I'm going to do a diagonal over here. And then I will do another diagonal, just show you a couple different diagonals. I'm spreading out. I'm going to spread out some of that risk, 3,900. And let's go to 39.10 over here. Okay, so we'll do another diagonal over here. We'll do only one of those. Okay, so this one's a little more bullish, a little more accelerated. So together we've got kind of like this double diagonal thing going on. So I got one diagonal here where I'm a little bit further up. I've got two diagonals over here where I've got much more range down there. I've got a good positive Vega right there as well, just in case, hey, things start going back down over here. So I've got a few of these happening. So I've got kind of like a 2-to-1 ratio. Boom, a little bit there to the upside. Let's go with 5 of these, and let's go with maybe 7 of those. Okay, so now we've got kind of a spread like this, and if it keeps grinding up, we should be okay, and we've got a good theta here, and then I could roll some of these later as needed. So a spread like this could be a nice trade. The way I would manage this is once it starts getting past this zone, this zero kind of area of expiration, or sorry, delta, I would start making sure that either this whole thing comes off. The other way to manage it is, remember, these diagonals over here, once it gets kind of to break even right there, it should make a tiny bit of profit. It's not huge, but I didn't want it to be too bullish because, again, this market is kind of flaky. It goes up and then it sells off. And then on the downside, I just use the break even here as a stop. And then on these, the same thing. I just use the break even as a stop. It's kind of a nice point of reference. And if it keeps grinding higher, what I could do is take off one contract, one contract, one contract. So that's kind of the trade I will do for now. And we'll see what next week kind of brings. But this is kind of one of the trade ideas or concepts that we may take a look at. And stuff like this goes into a lot of the courses and classes that I also work on. So anyway, hope that helps, gives you a little trade insight on maybe something like this in the marketplace. Something like, hey, maybe I would do something like that. How would I look into it? How would I manage it? How would I structure it? And I would do something a little shorter duration. That way, the volatility is not a problem if it kind of keeps grinding up. But on the other hand, it does benefit me a little if it pulls back. So, just a small little benefit there. So anyway, try and be patient on these fills because they will whip you around. But once you get filled, then you should be okay. So we'll see how it goes. You could also switch one of these, by the way, on the one that's a little bit on the upper end, which is this 3110. What you'll notice is this one is quite bullish. So the put side, if you're struggling, just switch it to the call side, and you might be able to get a little bit of a better entry or order if you're kind of following along, or if you like that type of trade, just because it's on this upper end. And then sometimes it's just easier to get filled because you're out of the money and it's maybe a little bit more traded. Does it really matter that much? Nah, not really. But from a liquidity standpoint, maybe so, maybe a little bit. So anyway, thanks for joining me. I'm gonna go ahead and try and get these filled maybe, and we'll see what happens, and then we'll go from there. So I hope you found this helpful. Feel free to check out the website at tradersfly.com and check out the one-on-one coaching or mentoring there. And I'd be happy to work with you if you're serious for a longer term commitment where, you know, we go in 3, 6 months, 8 months deep with people, depending on the program you choose or how deep you want to get into it. So thanks again for joining me, and I will see you on the next video.